And foremost, the news at hand, you have hiked rates. Great, sir. Great to have you. You've hiked rates by 5 to 10 basis points. What is the kind of cumulative deposit rate hikes seen so far? How do you see higher costs impacting margins?
No, basically, like we have increased the deposit rate by 10 basis point for maturity of more than 1 year to 2 years. And for more than 2 years to 3 years, this is 5 basis point. And this is basically to take care the interest of our customers, like our depositors should not be put to any disadvantage vis-a-vis the depositors of other bank. Otherwise, liquidity provision wise, we are very comfortable, and our LCR ratio is 140%.
Appetite to pass on higher cost of funds to customers as well, and how much of your book is on fixed rate versus floating?
Like our floating is something around 85%. Okay. So, MCLR call would be taken by our ELCO committee.
Okay, the system liquidity is still very much in deficit as we understand. Do you think that even if RBI does not hike rates in the December policy, would deficit liquidity mean that SBI may still go ahead and hike deposit and lending rates?
No, it depends basically, like what I was saying, that per se liquidity is not an issue for SBI, like our LCR ratio is 140%. Okay, but if the other banks are rising rate of interest on the deposit, then we can't put our depositor at a disadvantageous position. So, naturally for some of the maturity buckets, there would be a need to increase the interest rate.
But do you see this as the start of things? Do you see this as, you know, a trend in the making where we are into a tightening mode, and so, you know, rates will only go up from here? And if so, by how much, you reckon?
No, it would be very, very difficult to say, because like if you see all the external factors, there are fluctuation, you see the exchange rate and you see the crude oil. So, there are so many things which are changing, fluctuating very fast. So, depending on the external environment, we will take a call.
Okay. So, what is it that you are expecting that the RBI does in the December policy, given you know that there are lower oil prices now and significantly lower in the last 40 days? Do you see them cutting CRR in December?
Yeah. So we are not expecting a cut in the rate. We expect the status quo.
Credit growth has improved to 15.6% in the first week of November. Is the pickup in growth sustainable? As a banker, which are the sectors that are seeing higher credit, to your mind? And more importantly, sir, if you could just tie in within that answer whether corporate demand for credit is improving.
Can you please repeat? I am not able to get.
I was asking you about the traction that we are seeing in terms of credit growth. The last reported numbers indicate that the growth has come in at 15.6%, which is, I believe, a good number. Could you give us a sense on where, which sectors are contributing to this higher demand for credit, and is corporate credit demand back essentially?
So, it is coming from both the sectors. We are seeing the similar growth from the personal retail and as well as from the corporate. But most of the corporate growth, it is coming from the PSUs and the government sector.
Okay. And what about liquidity situation for NBFCs? Is that improving? Because SBI has bought loans worth over 15,000 crore rupees from NBFCs, as we understand. Is there more room? Is there more appetite?
Oh yeah, definitely. Like if we catch hold of some good quality portfolios, which would take care of our priority sector requirement. So, depending on the quality, we would definitely like to purchase further.
And would you say that there is scope for a market share gain that you see for SBI in particular because of the slowdown in NBFCs?
Yeah, it's a very good opportunity for us in terms of both direct lending as well as purchasing the portfolio with the better margins.
Okay. What about deposit growth? Do you see that also improving substantially with these revision in rates for FDs and even for savings accounts? Is the focus on building CASA?
CASA, we are seeing a very good growth. Like our CASA growth is outpacing the growth for the term deposit. So our CASA ratio is hovering around 46%. So our CASA growth is definitely much better, especially the saving bank growth.
Right. Recently we've seen rating agencies downgrade Shapurji Palunji. Overseas bonds of Lodha developers saw a huge crash. Investors are surely concerned about the real estate sector and the health of the sector. Do you think the worst is yet to be seen when it comes to real estate, or would you say it's behind us?
At this point, it would be very, very difficult to say because from the real estate, again, it would depend on the strength of a particular house. If financially they are sound, there are no issues, but definitely the real estate where the liquidity may be a problem for some of them because of the credit issues. So there may be some problems going in future, but immediately, especially for the strong developers, we don't see any problem.
And largely funding for real estate, that slowdown, you don't see that turning into a systemic crisis?
I think if you see, like, there were a lot of talk about the systemic crisis because of the NBFC part, but most of their like CPs have been rolled over, and there is no risk, and I think the liquidity issues of the NBFCs have been taken care of.
Right, and just before we wrap up, I want you to understand, do you still think NBFCs still need more provisioning of liquidity to continue normal growth, or what is your own assessment of the on-the-ground situation?
No, I think the way the NBFCs were growing in the past, the same growth we are not going to see in future. In terms of the availability of funds to them, in terms of the pricing of the funds. So I think the way they were growing in the past, there would be a slowdown on the NBFC side in the near future.